What is different this time? So the most interesting quote or phrase which you may be hearing, this time it's different. So I just wanted to do a video on what is different this time, and in detail why stock market is moving up and up and stock market economy is moving down and down. And there are so many things which as normal people, we don't understand. There is a lots of decoupling between the stock market and the world economy and everything. It's a maze. That's what I understood. In the last few months, I've been analyzing on how things are moving on one side and how stock market is moving on other side, and what people are believing on other side. And it's almost like again, now the euphoria is high. Everybody wants to make so much money in stock market, and that too it's possible because of huge liquidity, and so many of us are stuck in home and we wanted to trade on a frequently basis and we wanted to make money. And market is also providing lots of opportunities to create money, and nobody has expected. And end of the day, now what people are saying is this time it's different. Don't worry, market will go on and on. And let's look at what are the four important things which is driving the market to so high, and what is happening for the last. We need to take lessons from the past when it comes to stock market, and we shouldn't apply straight away, because when we apply this time, we will have a reason and say that this time it's totally different. And that is what people had started saying. And now the reason is that this time it's different just because people understood how stock market works, and they know how the market works, and they are working on exactly the way it has to be operated, like selling on high, buying something low and selling on high. But on the process, they are making a huge mistake, like will that money be there for them when it is needed? So let me come to the conclusion points that, right? So let me explain what is that saying that why market is going on opposite side, touching new peaks from March lows. So first point is liquidity. Across the world, there is a huge liquidity, and the number one reason or number one culprit we can call is all the developed economies. They are able to print money. They are able to give money to the hands of the people. So just think of, you have been working in an organization and they say that for the next couple of months you shouldn't come back, you shouldn't come to office, and government is going to give you a wage support, minimum wage support. For most, the names are different, but pay protection support or minimum wage support, or by different names in US, UK, European nations, they are giving out. And if that money is there and you're not going out, you're not spending, you're not buying things, and all these stuffs are there, and what you will do? And people want to make money, and they think that there are lots of easy applications, mobile applications available for trading. In US, it's called Robinhood, I think, app, where it helps people to trade easily. And similarly in India, if you see, Zerodha is there, and so many are there. And same goes with European nation as well as China. In China, after 2015 lows, market has peaked $10 trillion. The market cap at that time was 10 trillion. There was a huge fall because of so many dummy companies, and right now also they are figuring it out, but still people are trading like anything in China also. In US, the thing is, like, because of that easy money, they are trading in companies like bankrupt companies without any logic. They are trading in the bankrupt companies called Hertz. It's a car rental company. They filed for bankruptcy with the government, and these guys are moving the company from one level to the next level. So that's how the trading euphoria has kicked in. And recently in this week, Kodak, you know that Kodak is not being traded for a very long, and the valuation has come down a few $1 million. And right now they applied for producing in COVID related chemicals and COVID related products, and government has granted $750 million, US government. And just with this single news, they are driving the stock market to like that. They had moved from few millions to $2 billion, which they wouldn't have expected. And that's how the crazy people are. They wanted to trade on companies, they wanted to make money. And these are examples to understand that how people are trading between hands and they are moving. In Indian context, we have some company called Ruchi Soya, and there are so many people who are trading in penny stocks, few rupees, 2 rupees, 5 rupees, 10 rupees stocks, and they are driving the market. And if you look at the last few months data, the stock would have been like moving up, and they are seeing that there is a huge opportunity lying in these penny stock companies. And remember, it's not backed by Tata Sons, it's not backed by Reliance, or it's not backed by anything. And you also should remember that even Reliance backed Anil Ambani's Reliance brand has gone down like anything. Reliance Communication is the best example. From so high, it is in few rupees, few paisas, and it has gone. There are so many infrastructure companies which has traded like more than few hundreds in 2008. Now it is trading on few paisas. So all these are examples of what has happened in the market in the last not 10 20 years, more than 30 40 years. So liquidity is the number one factor driving the US market and developed nations, and that money is getting pumped into emerging countries like India, China and other countries, because the hope is there, because Indian market is so high and hope factor is there, and they are pushing. And the real economy, I'll just come back in the next section. And okay, why we should consider about US economy, and the number one reason is more than 12 years of QE. We call it as quantitative easing. And US government, again, the when printing money happens, automatically the direct factor is inflation should get kicked in, but the inflation factor is not coming into US or any developed nation. For your information, Japan has been in deflation, negative growth for the last 30 years. After the real estate broke in 1990s, they were not able to grow. They are pumping in money like anything, but they are not able to bring back inflation, because inflation is needed so that the price of the product increases. For example, you are buying a phone for $100 today, and even after 5 years, the product of the price of the product is almost like $100 or even $95. If this is the case, no one needs to work, and government is going to provide minimum wage support and all those stuff. The pressure is not going to be there to increase inflation, and that is what happening in US. And the number one reason, do you know? Because of ultimate export driven economy by which US had made, which all the developed nations had made. China has been doing export to the entire world, mainly to all these developed nations. And if you see, most of the car manufacturing, and Apple the best example, and most of the any brands, if you take, the manufacturing happens in China, and that would very reduced cost. And these guys sitting in US, they are able to make huge profits, and that is the reason anything, if you want to if they want to trade or do whatever, things are coming from China, the costs are going to be less, the profit is already be there. And that is one reason for the last 12 years inflation didn't kick in US. That is also the problem which they are facing. And so 12 years of quantitative easing, and this time they were planning to do something, and Corona came in, everything got disturbed. And now the Fed chairman and US government, Mr. Trump and everybody are saying that we will provide support to the economy as much as possible. We will at any cost, whatever it takes. Already they are given close to $3 trillion, and they are coming in this week to almost to say that for another $1 trillion the stimulus is going to be given. But the point is, from $1,200 wage support, they are bringing down to $600. They know that they can't keep giving that, because though they are printing money, they can't keep doing the printing money for so long. And this virus related stuff, we don't know what is happening, because they said vaccine is getting vaccine is getting produced. But right now, do you know the news in CNBC yesterday morning? I was seeing on news saying that this vaccine is going to provide immunity only for the next 2 to 3 weeks maximum. That's it. And they are testing it, and all are in trial 2, trial 3 phases. And each phase, even in the last phase, there is a possibility that vaccine is not being approved, or it may not be successful. And this is happening. All these things are produced in US, UK, or across the world. And China is also in the race. That is most I don't know what to say. China is also in the race to produce vaccine. So if all these people are producing, and will it be able to and all the temperature and everything is going to vary, and in the short run, even if it is being produced at the faster pace by year end or whatever, and it should be provide support to anyone who is as a vaccine, it should support. Not sure till it comes in the market, and we don't know when it will come. So let's be hopeful it comes at the quicker pace. And till that time, even for the next 3 to 6 months, if this is being pumped in, money is being pumped in, we don't know how much money it needs to be pumped in. US can use it, US can do that, UK can do that, but how long all the European nations will do? If all these guys are producing debt based economy, what about India and all the emerging countries? And recent report is that because of this corona, the thing what we did for the last 30 years, 30 40 years, to bring people above the poverty line. Almost like from between 2004 to 2012 or 14, we had done extremely well in increasing the poverty, not increasing the poverty level, increasing the money flow in the below poverty line, so that most of the people came up. And though it is very less, according to the global market, we just came up. So it's a very good news. But right now, in just in 4 months, that rate is decreasing rapidly, and we don't know what will happen before everything gets settled. So this is something interesting. This is not more than interesting, it's like, we don't know what to say, distressing news kind of stuff, what is happening, coming on daily basis, right? And the most important stuff, again, the third point is de-globalization. What will happen? What everything, the capitalist economy has brought an entire world to a common place, saying that it's a globalized economy. And US, and the problem which is coming out slowly is that China become a monopoly, like exporting almost like 20% of the world's export is being done by China. And if you see, most of the developed bigger companies, Apple or whatever, they are occupying the manufacturing is happening in China. And or Chinese companies are exporting, even the Chinese driven companies are exporting. And on another side, they didn't allow any other companies to come into China. And because of that, Alibaba and Tencent, these two are become biggies, because population is the biggest stuff what China is having. Because of that, they are able to generate lots of money, and because of that, these guys are able to pump in money in all the other startup economy. For example, they pumped in huge sum of money in India in all the startups like Paytm or whatever you take. They have large sum of money, and they are even going ahead to and investing in US companies also. They did the same thing in European companies. Now we are saying that de-globalization should happen, because China is becoming monopoly, which is really a tough job. And all the things whatever happening between China, US, India, and including Russia, it's like it's a big politics which is happening. Let's not go deeper into it. But de-globalization, it will take a lots of time. Trade wise, economy wise, it's a very difficult stuff to do in the current situation. And the point that India is decoupling from China, and US is also trying to decouple from China. But the point is, more than that, economy wise, trade wise, China has invested a lot in US sovereign fund. So they have a lots of money. If China wants to retaliate, if they sell lots of money, that will be like who is going to buy? And the rates are already low. What will happen? These are tough questions to answer, and these are things like most of the people are speculating and saying that, but let's see what is going to happen. And this is de-globalization is one serious threat current leaders are putting in the forefront, like most Trump and Chinese government. So this is happening between US and China, and India is also trying to decouple from China, saying that Atmanirbhar, different terminologies, but the point is we want to be self-sufficient. All these things are important points which is driving the stock market right now in particular each countries. And again, the most important thing, this is how we started the topic. This time it's totally different, but why it's different? The liquidity driven economy, and as the people, the traders, the mobile app traders, what we call discount traders, what they started saying is that people know what they are doing. I mean, the traders mindset is that I'm buying something now, maybe a day, or margin money will be there within 2-3 days. I can sell it off at higher price, and again I will buy, again I will trade. This is what is happening. And there has been news that because of charges and all those stuff, someone has made suicide, and those news also came into the news. So all these things are happening, and if the fall happens, it will be huge. In one of the movie I saw like a story about 2008 crisis, as well as in 1930, in 1929-30 depression. Do you know what was the reason? Like the mortgage prices was inflated like anything. Before even I am buying something, I'll say that I'll buy 5% or 10% of the money, I'll register in my name, I will sell it out to person, you probably the one you are watching right now, you are buying the same thing at 10% the profit, and it will keep on growing like anything. And that is how without properly registering and without me living in my house, the property has been going on changing hands, and this created a inflated real estate price. And on the same time, stock market also was like people were doing the same thing, margin money. With little margin money, they were hopeful that stock will keep on moving. Within nowhere, from X amount, stock market rallied to 10x, in 3 to 4 years timeline from 1925 to 1929, and they are so hopeful that US will be able to capture the world market in terms of automobiles, in terms of technology, all those stuff, even in 1920s, I'm saying. So with whatever technology innovation has been done, so because of that, people believe stock market cannot fail, and everybody came in the mindset that I don't want to miss, fear of missing out rally, which was very much evident, right? I don't want to miss the fear of rally. I want to trade, I want to make money. People jumped in, and even the same gone with real estate. And do you know what happened in 2008? The debt market was changing rapidly, and people didn't have real money in their hands. They just made some forged documents, and because of that, even the banks were doing the same thing, because no one believed the mortgage bond sales will drop, the swap credit and all those stuff was going on, and one or two people who identified this biggest point, and they did a shot. And just watch the movie The Big Shot. I will do a separate webinar on that, Facebook Live on that, probably in the next week, where they were ready to explain what is happening in the market, but nobody believed. The bigger companies, the Goldman Sachs and all those guys, and on the ground they did an analysis like what is happening in the economy, I mean what is happening in the people. Nobody was having money, real money, but they had their home in their name, just with written documents. Everybody were they did the on the ground analysis, and they even went to Moody's and Standards and Poor, and this is documented in the movie that this is a real thing, and nobody was answering even after that. These Moody's and Standard Poor, these are credit rating agencies. They provided AAA rating, but the point is it was not even minus AAA, it is even worst. So that kind of bonds were trading hands. Okay, let's now come to the India's point of view, what is happening. So all these are global things which is happening, and because of these things, automatically stock market is moving up and up in global, and because of that, these are the four reasons. And because of these things, automatically global market is rallying, and seeing the US market moving up, seeing the UK and the Singapore market moving up, Indian stock market is also moving like anything. And if you see yesterday's and today's data, US market has gone down by I think many points, 200 or 400 points in Dow, and ultimate reason is that consumer index has dropped to the level which is seen in 1940s. Just think of the levels, and it's just 4 months into the depression, and even before that they were not doing good. And India's case is also the same thing. Even in India, the Jan to March quarter was 3.2% of GDP, and now we are projecting that it's going to be minus 10% of the GDP, and we are losing. We are just growing economy, we are going degrowing in this probably for the last 6 months or so, more than that. And right now we don't have an idea, we don't have a plan what's going to happen. We're just hopeful of certain startup companies, we are just hopeful of one company, and one company is rallying in India. If you take off US, it's all about tech companies we call FANG: Facebook, Amazon, Alphabet, Google and Netflix. These are the companies which are driving the stock market, and if you take out these companies from Dow or Nasdaq, the rally will be very, very negative. That's how the market has behaved. More than close to 30% is occupied by these companies in the bigger index. In India, we have fewer companies, HDFC, and the biggest guy is Reliance. Because of this Reliance, do you know how much it rallied from nowhere, from 1000 points somewhere? Today it is more than 2100 points. 100% rally happened. They issued rights, and most of all the FANG companies invested, all the technology companies invested. That is the reason for driving up the rally, and they reduced the debt. These are the reasons. If you look at the future, everything they need to do a lot of stuff, but that is driving the market. And HDFC Bank, from nowhere they driven up. And do you know what has happened in the last 1 week? AMFI chairman say that it's I don't know why the market is moving up. RBI chairman provided the financial stability report. They said the most important stuff in India, NPAs are going to go up, non-performing asset of banks, from 8.5% maybe in the coming quarter. Here in the March month, it may be around more close to 14.5%, from 12 to 14.5%, and for me it looks like a very conservative approach. It's going to be huge. And all these companies were behind the things like the loan moratorium provisions. Has everything been done? But right now, once in August, if they are not extending, it's going to be a huge problem. And most of my interactions with new guys who come to me for understanding about how to manage this current situation, they say that they don't have any backup. And in these kind of things are getting worse in India like never before, because these are the Pandemic situation was never happened like never before. And if you are someone, if you're trading, or if your friend is saying they are making money in trading, this time it's not different. It's looking the same thing. The rally which happened in 2008, the rally which happened in 2000, and even in 1930, it's a steep rally for the last before the drop, it was like a steep rally. From here it's going like this, not exponential. If it's exponential, it's totally different. We understand it's a bull market. Now no one is calling it as a bull market. Everybody is enjoying the rally, making money, but when it falls, you might lose everything. So that is the thing I just wanted to say. And we don't know how long it will go, we don't know how far it will fall, but the point is economy is going on the other side, and we have so many reasons why economy and stock market is not on the same page. And one more reason, final reason I just wanted to say is economy is constituted of consumer durables and all those things, hotels, restaurants, service industry, everything. But on the market, Sensex in India, the representation is less. Only the banking companies are there, only the Reliance and other stuff are there. So if you see in Sensex itself, Reliance is driving, HDFC Bank is driving, Infosys is driving, and a couple of more banks. IndusInd, which fell huge, they started going up. So all the banking companies and Reliance and IT. So these are the stuff which is driving the market in Indian context. And if you feel that, if you look at other sectors, hotel industry is hit by anything, airlines industry is hit, most of the employees are not finding job, there is no opportunity for the next couple of months. The negative things are huge, and the best thing to do right now is hold cash. Hold as much cash as possible, and you will be getting once in a decade opportunity as soon as possible. So if you want to attend my webinar or some webinar on stock market, which is happening on coming Sunday, day after tomorrow, and Sunday morning 10 to 12, where I'll be explaining a lot about how to identify quality stocks by yourself, which is going to be very, very easy stuff to do. And I'll be saying about the recession and everything, and the economy, the three-step process. We call it as EIC analysis: economy, industry, and company finally. So once you understand the economy, how the economy is growing, and which industry at which point of time you need to do, and finally comes the company to identify. So if you want quality company to be identified by yourself, because don't depend on SMS, don't depend on emails, don't depend on these kind of TV channels things. And even if I say you should go and check whether this company is really good to invest. So this is how I'm going to explain. If you had understood for the last few minutes, almost like close to 22 minutes, I have been saying so many stuff. If you understood, please join my webinar on Sunday morning, and it's going to be a very easy stuff. So let me put that screen. So this is the website. You can go back and go and register, and if you want, just let me know how I can help you so that you are not falling into the trap of stock market right now. And the biggest trap which is happening is fear of missing out, and they call it this time it's different. Don't fall for it. So thank you so much. Please leave your comments if you want anything to be shared, if you want anything to be said to you. And I'll be doing a separate webinar, Facebook live in the next Tuesday. Then I'm doing a sessions on Tuesdays and Thursday, Friday. So next session, let's meet up on Tuesdays. Please come back. I'll be sharing what content is that. If you want anything to be covered on mutual funds or insurance or whatever, I'll be doing it in the coming sessions. Please share what you want to learn. I'll be providing that. Thank you so much for watching. Please share this video with your friends so that let them know what is happening in the market. Let them know what is happening in the global economy and in Indian context. Thank you for watching. See you on Saturday. Please leave your comments and share this video with your friends. That's the most best thing you can do to me. And if you like the video, if you like the content, please like it and share it with your friends. Thank you so much.